the biggest opportunities are very often in front of your eyes. The narrative is literally that today, even if you take 3 to 5 companies, they completely obliterate the offer of Bitcoin in the market. Now, the way to outperform the bull market is to potentially look at Bitcoin treasury companies, even if there are still monetary 4-year cycles and liquidity global cycles. There is a structural demand for Bitcoin from corporations. The level of demand that there is only with a few Bitcoin treasury companies. Imagine what this is at full scale when there is hundreds of them and when there is more sovereign type player involved.
Welcome to the Bitcoin for Corporations show. I'm your host, Pierre Rochard, joined today by our producer, Spencer Nichols, and our special guest, Alexandre Laizet from Capital B. Welcome, Alexandre. How are you?
Thank you, Pierre, for the invite. Doing great, and you?
Doing very well. So wanted to have you on because Capital B is one of the leading Bitcoin treasury companies in Europe, if not the leading. And I want to understand kind of what your background is with Bitcoin and how you really got very interested in Bitcoin and how that evolved into a professional role and leading Capital B in its transformation and scaling that business up because it's been very fast growing. So first, my question is, how did you go down the rabbit hole and get Orangeville?
Yeah. Well, Bitcoin is freedom, Bitcoin is sovereignty, and I learned about Bitcoin during COVID, and that was very much liberating for me. I discovered that yes, you can have hope in an economic sense if you have an asset that allows you to keep and transform the value of your work over time and space. And that dramatically changed my life. And I very fast, I wanted to allocate all of my time and energy to the most decentralized and secure network in the world, bounded by energy. And so in Bitcoin, the time works for you. And if on top of this you work for Bitcoin, then you double work for you. And so that is in the first sense a form of levered effect in your life because you work for Bitcoin and Bitcoin works for you. And that's a very powerful thing for you, your family, and of course, further down the line, your company and the investors of your company and society and the world at large. And so I started back in the day to apply what I knew how to do, which was to provide strategic advice and implementation of strategies for large corporates and large banks. And I became digital assets lead at Accenture. Fun fact, before that, I was a fan of on-chain analysis, and I applied machine learning, coding with Python, to the Bitcoin blockchain data. And so that was first data analytics aspect, where I discovered the power of Bitcoin transactions overall, and as well how the store of value was the key part for Bitcoin together with global accessibility and transferability, of course. And then I worked with a lot of banks to adopt Bitcoin and to make it a whole part of their traditional offerings. And there, when you have to explain Bitcoin and Bitcoin capital markets to newcomers and financial institutions, you have to really come down to what it is really and to understand it very deeply. And so a lot of learning, and after that I at the same time I was discovering what Michael Saylor was doing with strategy. And so the next logical steps for me were to launch the first Bitcoin treasury company over in Europe, and that was back in November 2024, where it was not yet a full trend. We were the third in the world to adopt a Bitcoin treasury company strategy focused on maximizing BTC yield. And that was followed by, of course, a massive initial still, but quite impressive trend of new Bitcoin treasury companies. So from COVID, discovering the sovereignty aspect and the freedom aspect, to unleashing all of your energy to Bitcoin, and doing so with a publicly listed company, to the benefit of all our shareholders.
Yeah, so that's a great path, and I think it raises the question, which has become a fairly common question of thinking about the relationship between having Bitcoin held by a corporation uh, put into opposition with the idea of individual sovereignty over Bitcoin. And so, kind of, what's your thought process on why those two things not necessarily at odds?
I work for Bitcoin, overall, the network, and the Bitcoiners all over the world as well, in the sense that I consider that there is not bad Bitcoin adoption. And I consider that by adopting Bitcoin with a corporation, you are strengthening the network from an economic perspective, because you are literally converting fiat into Bitcoin. And today we just announced 500 plus Bitcoin, which is more than the daily supply from mining. And so I think that's providing a lot of demand overall for Bitcoin, and that's strengthening the purchasing power over time for all Bitcoiners all around the world. But even aside from this economic argument, you could also argue that through all of the presentations and all of the education and all of the collaboration with the traditional ecosystem, a lot of the bankers, a lot of the lawyers, a lot of the employees of those banks, and the employees of the law firms, and the employees of the communication agencies, and conference locations, and so on, they are getting orange pilled every day, because they didn't know about Bitcoin, and now Bitcoin treasury companies are a major part of their business for a lot of them. You can talk with financial brokers, and now without Bitcoin treasury companies, they wouldn't be making the same revenues. And so when you have this coming of this new asset into your life as a professional, even if you didn't know about it, or even if you were a skeptic, if that composes 60% of your revenue, then it starts to make you think potentially about what is happening, or at least wanting to know more if you are a bit curious. And so what I've seen is that we've gone from maybe 2 to 3 large banks that were offering Bitcoin custody services to now tens of them. And I would assume that by the next 3 to 5 years, that would be hundreds of them. In fact, I was working for those banks to set up their capabilities, so I know that it's coming much more of them. And so when a bank is implementing a Bitcoin custody service, it's not one person that is in charge of it within the bank. It's literally tens of people, and even hundreds of people and sales down the line, that will be selling literally Bitcoin. And so that is creating first education for a lot of employees within the bank, and then it's creating a lot of education from the clients of those banks. And so we all know that the start for many people in Bitcoin has always, in some way, not maybe always, but a large part of it has been through a centralized third party. And by acquiring a lot of Bitcoin, and by creating a lot of demand for Bitcoin, a lot of banks are now adopting Bitcoin as well, at least the services to get access to it, and custody it. And by doing so, they provide more opportunities to enter Bitcoin for millions of people around the world. And that's very positive for Bitcoin awareness, and for Bitcoin repartition of ownership, and overall Bitcoin decentralization, because it's more decentralized to have 2,000 banks in the world doing Bitcoin custody than 3 banks. And so in that sense, the risk of failing people is also going down with this decentralization. The number of technology providers is also increasing, and overall it is more people being aware of Bitcoin. And you could assume that over 3 to 5 years, you could have, at the end of the day, more people self-custodying Bitcoin as well. And so it's an increase in the number of Bitcoin participants in the market. It's an increase in Bitcoin demand. It's an increase in Bitcoin education. And so overall, it's very positive for Bitcoin from an economic purchasing power perspective, and for Bitcoin from a decentralization even perspective.
So you mentioned all these banks adopting Bitcoin and developing Bitcoin products. Do you have a sense of what the European central bank's position on it is? Because here in the U.S., historically, under the previous administration, there was a lot of pushback on banks adopting Bitcoin, even though banks wanted to. So I'm curious to hear what the situation's like in Europe.
The ECB has been very vocal against Bitcoin, or at least from a skeptical perspective, let's say. At the same time, the commercial banks, on their side, they cannot now proceed without addressing the retail demand. All of it is going to neo banks like Revolut, for example. And when Revolut announces that 60 to 70% of their profitability comes from the trading of Bitcoin and crypto assets, the banks that have launched, the traditional banks that have launched neobanks that are completely underwater, they start to notice. And then you have, and even this would be not that much of a decision making crossing the line towards saying yes, let's do it. But then when you have large high net worth individual clients, and sometimes now corporations that are saying, look, if you don't provide this to me, first of all, I already did it with another private bank, but now I'm thinking to just completely change my relationship because this other traditional bank is now providing it to me. You are not. And so that's 10 million or 100 million out of your bank. That's not funny anymore. And so what is happening is two-thirds of the systemic banks are now have already started to launch, either without strong marketing or are in the process of preparing themselves to launch Bitcoin custody and trading for their retail and institutional base. That was already the case back mid 2024, where I was working for those banks. So you can imagine where they are now. Now they are in the middle of a lot of technological challenges to put in relation their traditional banking system with the Bitcoin ecosystem. And I would assume that will take, for the faster one, would take until the end of the year or early 2026. And for the other half, maybe that is lower, will take maybe 3 years. But in the next 5 years, Bitcoin will be fully accessible within the main banks for retail and institutions or corporations. And so that is extremely positive. And in that way, there is a strong delineation between Bitcoin as a store value that is basically a battle that's been won by the market, and where the ECB doesn't have a lot to say, and Bitcoin as a medium of exchange, where I would assume that there could be more pushbacks where the ECB is willing to push a digital euro. And so I think you could expect more restrictions in terms of privacy and in terms of the actual transaction in Bitcoin, maybe in Europe. At the same time, buying Bitcoin through a regulated environment and even withdrawing it is quite a vanilla product, and it's now been quite accepted within the banking environment.
Yeah, that's really interesting. And so when you look at this wave of adoption happening for Bitcoin, personally, Yeah, I think that's going to cause the Bitcoin price to go up. It's just supply and demand, right? How have you positioned Capital B in relation to that thesis, with your capital structure and kind of your capital markets activity and your asset side of the balance sheet?
So Capital B, since the very beginning, back in November 2024, has been for very large parts of the investor community in France and in the EU, the only or best way to get access to Bitcoin in a regulated environment within their equivalent of the 401k in the US, with what is called in France the PEA. Basically, European countries and at least France have a program where you have a tax exemption where you buy the stock of a company which is based within the EU and listed within the EU. And so when you buy and sell Capital B, you don't incur any taxes within this program for French taxpayers. So, for those types of investors, and many of them are not necessarily long-term holders, but can be traders, it is extremely positive to have access to a form of Bitcoin exposure through your local tax exemption wrapper. And for a lot of long-term holders of Bitcoin and long-term holders of Capital B, which I see emerge a lot, then you can see that this is also quite a very easy way to get access to a form of Bitcoin exposure without having to take out fiat from those types of programs and converting it into a stock which is completely aligned with your Bitcoin vision and completely focused on increasing your Bitcoin per share over time. So what we've done first is to do equity raises at premiums to the current stock price in the market back in November and December. Then we innovated with the first issuance of Bitcoin-denominated convertible bonds with a 5-year maturity, so only long term and with 99% probability of conversion if you believe in the trend of Bitcoin adoption overall. And after that, a lot of new equity raises and convertible note raises in Bitcoin, followed by now what we have started as institutional grade raises, which is a bit more of a roller coaster because it implies sometimes that there are some levels of market-based discounts that are applied with institutions, but at the same time, which are based on premiums with the MNAV that has the company. And so, on this basis, for example, we have raised 58 million euros. The first 5 months of our strategy, we raised 50 million euros. And now, with one single operation, we raised 58 million euros. And this included 30 plus financial institutions that joined in one single operations from 10 different countries. So what we have done is from the very beginning having a very international based capital raising with investors like Adam Back, Fulgur Ventures, UTXO Management, Tobam, the French asset manager, and overall, and then institutionalize that base with the scaling as well that can provide institutions, while at the same time it can also bring short sellers overall internationally that can discover the stock and start a shorting position, which is not abnormal, but for early stage company can be quite, of course, painful in the short term as well.
Yeah, that makes sense. And so as you kind of look at the lay of the land for Bitcoin treasury companies in Europe, do you think that there's factors in the European economy, the European capital markets that make it more favorable than other jurisdictions? That whether it's interest rates or other macroeconomic indicators, or even returns on the indices in Europe, like the CAC 40, the CAC 40, I guess they say in
Right.
English,
Yes.
which is kind of our S&P 500. The investors have a lot of different benchmarks that they're looking at.
Yes. Well, a lot of the issues that can be noticed in the EU, there is this meme of the EU being only focused on regulation and not on innovation and attracting a lot of economic activity. And there is also a lot of concerns in terms of security risks, in terms of privacy risks, in terms of tax risks. And all of those risks are actually opportunities for a stock, which is a lot of protection for individuals in terms of security, which is a lot of protection, as I mentioned, from a tax perspective, and which is counterintuitively also quite a protection in terms of privacy for many individuals because the shares are held through intermediaries and so on. And so, in that sense, you have very impressive factors of demand, and I think it's been seen between the high growth of Capital B. We've been the best performing stock over in France when we launched the strategy towards Q2, Q3. And you've seen also a lot of demand, for example, for Smarter Web and H100. And you see that there has been, I think, quite some demand for the new company in Netherlands, Treasury. And so I think that you can see with this high level of demand that the actual issues faced by individuals due to regulations or market context are quite very positive factors for Bitcoin treasury companies here. Also, what I would say is quite an important factor for Capital B is that actually the bar to compete in the EU is much higher than the bar in the US. You can see that there are already tens and tens of companies that have adopted the Bitcoin strategy in the US, while in the EU it's already or it's still very few of them, and so that can be attributed to some extent to the difficulty for the common company to raise capital in early stages. Risk-taking capital is mostly international. And so that's what we've done at Capital B is since the beginning raising 80 to 90% of the funds outside of the EU. And because there is a gap between the size of the EU market from an institutional perspective, which are comparable actually to the US and to Japan to some extent. For example, the convertible bond market is 90 billion in the US and 60 billion in the EU. So it's quite a large institutional market and actually a very advantageous one for a leading company in the EU that would achieve these first steps to be achieved to reach those markets, because a lot of those markets have mandates to invest in EU-based companies. And on top of this, what you have is as well rates that are overall lower than in the US as well. And so from that point of view, you've seen Metaplanet that's been able to now start to look at launching preferred stocks with a lower interests than what you would apply as a base in the US. And so you would see that with the same type of interest rate than in the US, in the EU, that would be extremely attractive for EU-based institutional investors. So I would like to summarize this by saying that at first glance, it would seem that institutional investors in the EU are more conservative, especially in the early stages. But then when you look over the medium to long term, the opportunity is potentially duplicated because you have a higher bar of entry. And on top of that, the amounts are very comparable with the size of other markets. And on top of that, you have over benchmarks in terms of performance that are much lower. So, for example, in the US, the convertible bond market has been quite mature and has been quite addressed by a lot of market participants, while in the EU, EU-based institutions are highly in demand of new issuances because there is not enough companies able to provide the conditions for both an interesting offer and at the same time for the company to have something very accretive, because we are accumulating Bitcoin with the proceeds and not spending it on wishful activities over 5 years.
So when we look at the Bitcoin Treasury companies in general, I've heard a view of concerns about leverage, over leveraged, and that people are worried that they're going to have to sell their Bitcoin if Bitcoin goes down and they get liquidated. And then I've heard the opposite, especially in the case of Strategy, for example, where there's no recourse, and that's not kind of the outcome that one would expect. How do you think about leverage and risk management on the financial side, given Bitcoin's price volatility?
So that is of utmost importance because there is a usual saying, it's not about timing the market, it's about time in the market. And I think it's highly applicable for a Bitcoin treasury company. As you are holding Bitcoin, then if you would stop to do capital markets operation, at least from a fiat financial performance, you would be much better off than by doing a bad capital market operation if you were in the necessity to do so. And so one of my core priorities is to make sure that Capital B is not going to face a situation where we have to do a capital market operation, or worse, of course, where a company would have to sell Bitcoin. And so the principles are extremely important: to raise capital, accumulate Bitcoin, not lose the Bitcoin, hold Bitcoin forever, not sell, not lose the Bitcoin. And so what this means is that a company should have enough cash on its treasury to meet its short-term to medium-term obligations, so that the company is never obliged to do a capital market operation to finance its operations. And so since the beginning, it's been, of course, a priority for us to have a business, a P&L that is independent on its own to go with profitability over time. I mean, you can have a bad quarter, you can have a bad half year, and so on, but overall, that is a very healthy business. And the second aspect is to have Bitcoin treasury company operations that are self-sustained and that are able to sustain a long bear market. You know, if there is a 1 to 2 year bear market, that the Bitcoin treasury company has enough in its short-term fiat traditional treasury to cover its expenses, because you have to pay lawyers, you have to pay the banks, and so on. And so when we do a capital market operation for the Bitcoin strategy, we keep a very small percentage, but still a small percentage, to make sure that we have enough to pay the fees of the lawyers and of the banks and so on. And we allocate 90 to 95% of the funds straight to Bitcoin, of course. But it is important for a Bitcoin treasury company to have a healthy and a conservative financial management. And so for me, that is the first base. And then the second base is to only issue financial instruments with a long-term time horizon. And in that respect, all of our Bitcoin-denominated convertible notes first are zero coupon, so there is no fiat demand in terms of the cash. There is no cash component in the interest rate, and they are 5-year time horizon. So it englobes a traditional historical 4-year cycle of Bitcoin. And you might not believe that Bitcoin cycles repeat, but you don't want to bet against them as well. And so in that sense, for me, that's been extremely important for us. And then there is another layer, which is where a strategy is right now with the preferred stocks, is to make sure that the company, if it issues products that imply a form of cash dividend or alike, at least cash obligations, then those cash obligations are extremely conservative in terms of their percentage from the capacity of the company to generate enough capital income to make sure to cover those interest rates. And so strategy has built a very substantial balance sheet that provides a form of liquidity in the share that in and of itself creates a very strong capacity to do ATM in accretive conditions. And on top of that, a strategy would have other options if they wanted to. Michael Saylor has mentioned that a strategy could even have the option to sell some volatility on top of some parts of the assets. Or, last case, which is not the preferred ones, but of course, the strategy is over collateralized with the Bitcoin they have on the balance sheet compared with their cash obligations as well. And so, in the case of the preferreds, in any case, if they would face a difficulty, first, the preferreds, they only represent up to 20%, 10 to 20% overall in terms of fiat obligations as principal amounts, but you don't have to repay the principal. So then it's only the 10% of 1 year if there would be a difficulty. And in that case, it would not be a life risk for the business, even if that would be a very difficult situation. But that is why strategy is setting those a form of additional leverage in a way that is extremely conservative, because it would be only 20-30% of leverage on the most significant balance sheet at that time, potentially in the US. And so in that respect, I would assume that over time, leverage in some ways will increase in Bitcoin treasury companies because it is low compared to the traditional system, and because it is completely over collateralized compared with the traditional system. In the traditional system, companies, they ask for money without having the cash, at least strong asset on their balance sheet, just on the promise of future cash flows. In that case, yes, there is a form of prospect in the terms of the growth of the company, in terms of Bitcoin per share, and new types of capital market operation that bring in new capital inflows. But still, there is still a complete over collateralization in terms of the assets, which makes it extremely low in terms of risk, and at the same time provides a new form of financing for the Bitcoin treasury companies. And so in that sense, unless Bitcoin falls down for a very prolonged period of time of 5 years, then I would say that 99% of probabilities is that the companies that focus on long-term financial instruments with a conservative approach, and of course an adapted approach to their local market and their ability to generate more capital increases at premiums, then in that case, those companies will likely strive over time, provided that they don't take a toxic short-term leverage and they focus on long-term traditional and conservative instruments.
Yeah, that makes a lot of sense, and that's really well said. When we look at on the media side, the Financial Times, they put out a video that was very skeptical of what MicroStrategy was doing. It was sometimes comical, unintentionally, as well. How do you think the media relations have been like with European journalists? And then as well, I've noticed you on social media being very transparent and being directly communicating with shareholders and really with the public in general. So I'm curious to hear kind of how you think about communicating what the company is doing in old media and new?
There has been a very significant evolution. Today, Capital B is already a global company. We have global shareholders, and that represents tens of thousands of shareholders, actually. When you look at what we are doing weekly, if not daily, direct communications with our shareholders in the form of course, podcasts, in the form of interviews, in the form of live spaces on X, where I address one by one all of the questions of our shareholders. There is no preparation. This is as if I was in a meeting with our strategic or institutional investors. And so all investors are treated in the same way, and all investors get the same information at the same time. And that provides, of course, a lot of value to our investor community. And so there are a lot of Bitcoin treasury companies in the world, but we are top 5 Bitcoin treasury companies in terms of the number of people in our communities on social media. And that is, of course, extremely valuable for the company to have such an impressive shareholder base that is also contributing in a great way to answering all of the questions in real time in different social media. And so, in terms of the traditional media, well, you can notice a major change from, it's a bit old, but from 10 years ago. Now, the major source of information of traditional media is X. They are literally showing X posts on television. They are commenting X posts on the traditional media, and that tells you a lot about where the information comes from. And where the information comes from is where we are spending the most time. And when we started the Bitcoin Treasury Company strategy in November, there was not that much coverage. We were invited very soon on TV to explain, but that was like the program on French television dedicated to digital assets, for example, on the business channel. And now, a few weeks ago, there was a piece on Le Monde, which is a very mainstream. It's like the New York Times in France. It's a very mainstream media, and the article was actually quite positive. They took the time to interview me. They took the time to interview some of our strategic shareholders, and actually, it was not like a piece of interview that the interviewer asks you a few questions and then they say just the price drops and he lost all of his money or something like this when it was the bear market for strategy, for example. So in that case, that shows a major evolution because of the recognition that Bitcoin is now a reputable reserve of value that's been accepted. Bitcoin is not the giant consumer of bad energy. In fact, it is quite the opposite, which is positive for the development of different forms of energy. And now the only thing that remains is volatility is bad. This is the only thing where we still have a lot of work to do. Is that yes, there is a trend, but it is too volatile. And so since Bitcoin is not volatile enough right now, then we look at Bitcoin treasury companies and we say, oh, this model is interesting, but look, they are down 60% over this specific time period. Doesn't matter if the company is up 600% over another time period, but still, that's the last step to, I think, have a lot of work to be done to zoom out and to understand what those Bitcoin treasury companies are really doing. And so that's where I see that there is still a lot of education, but overall extremely positive in terms of the trend.
Yeah, it's interesting that now we have to do Bitcoin education, but also stock market education, which is that the the stock price can be different than the intrinsic valuation, and the intrinsic valuation is subjective by different market participants. They're going to attach different numbers to that. And so I think that creates a lot of difficulty for the company's management to try to communicate with shareholders, optimize for long-term value while talking about strategy every day. How do you manage that tension in terms of time horizons?
Yeah, I think that this has changed as well within Bitcoin treasury companies. When we started, at some point, it took us 3 months to do one operation between December and March. But that single operation generated a 700% BTC yield. So then you can ask yourself, was it worth it to wait for 3 months to get a 700% BTC yield? I guess yes. That was quite accretive for our shareholders. At the same time, then there was back in May and June a lot of new Bitcoin treasury companies emerging, and there emerged the trend of weekly announcements. And so, with weekly announcements, there has been some form of expectation of capital market activity. But weekly capital markets activity, of course, is desirable and would be the best option, even if you want to have a daily capital market activity. If that's accretive, that's the best, that's for sure. At the same time, sometimes it is better for a Bitcoin treasury company to wait so that the conditions for capital market operations are better than if you wanted to do it in a very short order. At the same time, sometimes capital markets are not ready to do an operation in size every week. They require a lot of work behind the scenes to have meetings with 30, 50, 60, hundreds of institutions over a determined time period, and that is not done within 1 or 2 days. And so there has been as well, for example, a pause in our capital market operations within some weeks of the summer. And after some time, that was followed by a major capital raising operation of 58 million euros that allowed us to acquire 551 Bitcoin more. And so sometimes it is more accretive to do capital market operations on a very regular basis, and sometimes it is also very accretive to be more patient and to prepare for a large scale, more structuring operation as well. And so at the same time, a lot of our shareholders want to get updates of the company every day, every week, even if the company is not doing a lot of capital markets operation at a specific point in time. And so my observation on this front was that at the end of the day, what matters is to understand Bitcoin and understand what the Bitcoin treasury company is doing to take full advantage of a Bitcoin standard with the use of intelligent leverage. And so, in that sense, that's why we launched a series of interviews as well to provide more Bitcoin education and more education in the Bitcoin treasury company space overall, that is not necessarily related to daily capital market activities, but that provides more education and understanding of what we are doing, and more importantly, on the asset that we are capitalizing on. Because today, and I still today I had, for example, another meeting with a very significant family in France that has a lot of capital, and we are still in the very early stages of Bitcoin understanding. And so Bitcoin education is very important, and Of course, communication with our shareholders is at the most regular pace. At the same time, I think that a balance between capital market operation type communication and Bitcoin education and conversations with our shareholders on questions they have and so on is good to have. And so over time, we will also all find the right equilibrium.
Yeah, that makes a lot of sense. And when you think about raising capital from the investment universe, whether it's retail investors or institutional investors, how do you think about it internationally? You mentioned that you have investors globally. Does that mean you're having to spend a lot of time in airports and airplanes?
Yes, I do. At the same time, this month I've met with 60 plus investors and institutions, and a lot of them are also done through a call. So it doesn't necessarily mean that you need to change cities every time, but physical presence is important. So I would say that when we have a lot of those events with the Bitcoin conferences and so on, I also enjoy those opportunities to schedule meetings with investors in the different cities. But overall, it's more working around the clock with US time zones and London time zones and Asian time zones and Paris and Abu Dhabi. That's more the sport than the airport itself.
Yeah, Bitcoin is 24/7, right? And
Yes.
global. So when we look at this past week, we were both in New York City for the Bitcoin Treasuries conference, and one of the comments that really stuck in my head was obviously from Michael Saylor. He mentioned that this is really the first year of the industry, and that if we look at the past years, we didn't really have a crystallization of understanding around how a Bitcoin treasury can create value. I thought that was a really interesting remark, and it kind of gets to what the definition of a Bitcoin treasury company is. And historically, the definition has been that if the company has Bitcoin on its balance sheet, then it's a treasury company. There definitely seems to be more nuance to that. How would you define a Bitcoin treasury
Yeah.
company?
Well, in my view, the Bitcoin Treasury Company term with capitalized letters at the beginning of each word has been invented by Strategy. And that was before a term that was called by Strategy Bitcoin Development Company. That was the first iteration. It was an intent to say there are real estate development companies and there is a Bitcoin development company. And at the beginning, Strategy had also started to launch some products around Bitcoin. And then what Strategy discovered is that actually it is not really a Bitcoin development company. It is actually performing the role of a treasury, almost like a central bank of capital markets, of digital capital markets. And so the term treasury was more adapted, and that initiated back around mid to end October the start of with the term of Bitcoin Treasury Company, the start of companies that are focused on maximizing BTC yield, the increase of Bitcoin per share, and specifically with the issuance of both equity and credit type instruments in capital markets that take advantage of the arbitrage between all of the capital in the world and the fixed supply of Bitcoin. So, in short, a Bitcoin treasury company is not only a company that has Bitcoin on the balance sheet, is a company that raises capital at pre-existing and or embedded premiums in capital markets with a listed entity to accumulate Bitcoin in a way that increases Bitcoin per share. So if that sentence is not fully complete, then that is not really a Bitcoin treasury company, or at least it could be a project of a Bitcoin treasury company. But when you take that definition, then you end up only with maybe 10 to 20 companies in the world. When you have 200 companies that are listed that have Bitcoin on the balance sheet, some of them, they would have Bitcoin and they would have other crypto assets. Well, that's not a Bitcoin treasury company. Some of them, they would have a bit of Bitcoin, but they would do as well a capital market operations that would not increase Bitcoin per share. Well, that is not a Bitcoin treasury company. Some of them, they would not even do capital market operations. Well, that's not a Bitcoin treasury company. And then some of them, over time, they would not tap into credit markets. And over time, those will not necessarily be Bitcoin treasury companies in the full sense. But still, if a company has Bitcoin on the balance sheet and is raising capital to increase Bitcoin per share and is listed company, I would say that is a Bitcoin treasury company. So in terms of year one, um, fun fact, Michael mentioned 5 November, which is also the date of the launch of our Bitcoin treasury company strategy. It was exactly the date of the election of Donald Trump, which was not a bad timing for us, of course. Yes, last year was year zero with, of course, the recognition of Bitcoin as an institutional asset with the ETFs. It was the start of the gold rush, year zero, and year one is the start of the companies that provide the ways to access Bitcoin. And the best way to access Bitcoin is through a Bitcoin treasury company.
So that raises the question of when do you think the gold rush is over? Right, there's a constant question of what will all these Bitcoin treasury companies do when the arbitrage no longer exists between the fiat cost of capital and Bitcoin's long-term growth rate. What's your long-term vision for that?
Well, first of all, the view of Michael that I share is that the credit markets on top of Bitcoin will be bigger than Bitcoin itself. So, in that sense, the market for Bitcoin treasury companies is quite infinite because credit has not necessarily a limit. It is based on the willingness of different investors to extend forms of credit. Then it might be more difficult to receive credit, which is not in fiat. At the same time, we've raised more than half of our capital with Bitcoin-denominated capital. And so, in that sense, I would say that even on a purely Bitcoin-denominated world, not all companies will be public. And so there will still be a lot of demand from a lot of private entities to put their Bitcoin into the best performing Bitcoin treasury companies and to extend that either through equity or through credit markets. At the same time, I would say that if that happens, well, that would mean that Bitcoin treasury companies, the first ones and the largest ones, the leading ones would be the ones that would have the most options in that environment. And potentially, what would matter a lot at this time is the capacity of the company to grow Bitcoin per share in a way that is more multifaceted than it is now. We are starting to see what Bitcoin treasury company M&A looks like with Strive and similar just right now. So I think that that will continue to potentially grow. There will be a lot of everything that we see in traditional capital markets in terms of structured products and in terms of different ways of financing and so on will evolve. A Bitcoin denominated income will be, I think, quite an important aspect. But I do expect that even in 10 years or 15 years, a lot of people will still want a fixed dividend instead of the volatility of capital market equity. And so, in that sense, Bitcoin equities will still be able to issue forms of credits that provide a fixed return in the exchange of permanent capital on their balance sheet. And so, I think that this risk would be more of an opportunity for the companies that do it right from now.
Yeah, that makes sense. Earlier this year, we saw a short squeeze with Metaplanet. Do 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 you keep an eye on making sure that the you know d- people who want to short the stock have the opportunity to do so, and also that there's kind of risk management guardrails in the markets to prevent kind of manipulation? I feel like there's a lot of retail investors who are often worried about that.
Yes. Well, the markets for shorting stocks is quite open in the world, and what retail investors can do if they want to reduce shorting or if they want to make it more expensive is to ask their brokers to have their shares not available for shorting. And so that is very substantial sometimes in terms of the costs that shorters have to pay to short the stock. For Capital B, it's been between 100%, 200% of costs. And even with this, when we announced our capital market operation, the last one, we've had one institution or few of them dumping 1 to 2 million shares in short selling at the open and in the following days. And so what you can see is that, yes, this impacts a lot the stock. At the same time, for investors that believe in the long-term potential of the company, that's also quite an outsized opportunity. And we can see with what happened with Metaplanet earlier this year that the extreme can be both to the downside and to the upside. So at the end of the day, those short sellers are playing over time against what Bitcoin could do as well, because the Bitcoin Treasury company is also a lot of Bitcoin on the balance sheet. And so, over the short term, you cannot really prevent short selling from happening. In fact, over time, it is quite positive for the company because it increases liquidity in the stock, and over time, it increases the capacity for the company to raise more capital, because if there is more institutional short selling, that provides more comfort for institutional investors over time, because they know that either they can hedge themselves or they can have more liquidity in the market. At the same time, yes, we definitely are cautious when we do capital markets operations, so that the investors that we bring in are mostly long only. You cannot prevent investors from typically from short selling in many jurisdictions. But what you can do is being cautious in terms of the investors that you prioritize. So that's what we've done. At the same time, you cannot prevent international institutions from playing institutional games. And that's unfortunately what retail investors have had to play with. And that's, I understand deeply that this is quite painful in the short term. At the same time, we are doing everything in our hands to do more accretive capital market operations that could surprise the market at some point, and that could create conditions that could be quite extreme as well, and not necessarily in the downside. So, of course, that dependent on a lot of factors, but it is our role as a company to focus on what we can control, and what we can control is not necessarily the short sellers internationally. What we can control is to focus on what are the next steps in terms of significant capital market operations that increase the number of Bitcoin per share.
That makes a lot of sense, and we look forward to hearing more about your next capital market operations. Really want to have you come back on and walk us through those as they occur, because I think that, to your point earlier, the greater the amount of education we have in this space, the more people are aligned and they can understand how to make the right decisions for themselves. So I really appreciate you coming on today, Alexandre. Always happy to see you in person as well. It's great to see you in New York, and look forward to running into you at a conference in the near future. Uh, Before we wrap it up, I want to ask Spencer, is there anything that you wanted to bring up before we close it?
Yeah, I think right now we're operating a little bit without a larger narrative in the Bitcoin space. And before we started recording here, Alexandra, please excuse my lack of accent there, but I'd be curious what you see on the horizon for Bitcoin. Is there any catalyst that you're keeping an eye on? And I think alternatively, the question is Bitcoin becoming dominated by passive flows through vehicles like spot Bitcoin ETFs? Curious if there's anything you keep an eye on, or if you're really just focused on the micro of capital B and just raising capital and kind of blocking out the noise, but would welcome your thoughts.
I am definitely always focused fully on Bitcoin per share increase for capital B. However, what I observe in the market is, and in life in general, is the biggest opportunities are very often in front of your eyes. And this morning we announced 551 BTC purchase. That is more, as I mentioned, that the daily supply of Bitcoin miners. And on top of that, Strategy announced close to 1,000 and Metaplanet 5,000. And so this is literally in front of your eyes. And I would say that in terms of narrative, the narrative is literally that today, even if you take 3 to 5 companies, they completely obliterate the offer of Bitcoin in the market, at least from the traditional sense of the mining supply. And on top of that, you can see that there is quite a very positive dynamic where investors, when they go out of Bitcoin treasury companies, they many times go back to Bitcoin itself. And so now the way to outperform the bull market is to potentially look at Bitcoin treasury companies. And when you sell Bitcoin to buy a Bitcoin treasury company, the Bitcoin treasury company buys Bitcoin. And when the investor sells the Bitcoin treasury company, typically it comes back to Bitcoin. So in that sense, what I hear across institutional institutional sectors and investors is that even if there are still monetary 4-year cycles and liquidity global cycles, Bitcoin itself, there is a structural demand, a structural demand for Bitcoin from corporations. And imagine the level of demand that there is only with a few Bitcoin treasury companies, pure player like 10 to 20 Bitcoin treasury companies. Imagine what this is at full scale when there is hundreds of them and when there is more sovereign type player involved. It has already started. You see some sovereign wealth funds taking positions in Strategy, in Metaplanet, and so on. And that is what we are preparing for at Capital B as well. Is the conditions under which those deep capital pools can get into Bitcoin treasury companies. And I would say that this is a major factor for those Bitcoin treasury companies to grow over time and to get to sizes that are now allowing them to enter into indices like Strategy, potentially at some point in the S&P 500. I saw Metaplanet entered in another one of them. And we have also reached on some days liquidity that is at Capital B that is comparable to the CAC 40 already. So what you see is that even in terms of size, if we execute our plan, it could go quite fast as well. And so what you see is even a few companies can reach levels of demand that allow them to buy more Bitcoin that there is available in the market. And that is in and of itself a very strong narrative. It is just that the model itself is extremely misunderstood or feared. You know, when you have players that are not in your portfolio that are completely outperforming you, you might feel a self-defense mechanism to justify first your decision to not allocate. And then when it happens a second time, then you get your management to tell you that you need to change something. And then when it happens a third time, then you literally change something. So I would say that there is a gap right now between the size of the opportunity and the growth potential of those companies and the education process of institutions. Because a lot of the analysis that's been happening on X for Bitcoin treasury companies is just now arriving on the desk of financial institutions for many of them. And so I would say that the combination of the banks launching, the systemic banks launching their retail offerings for Bitcoin, together with the institutions starting allocations to Bitcoin treasury companies, together with sovereign type players starting to look seriously at the sector, would be a large factors of demand for the coming years. At the same time, a lot of time you could overestimate the short term and underestimate the long term, while the reverse happens. So I would highly incentivize to keep a long-term perspective into all of this, because and it's even better because if that happened tomorrow, you would not have had enough of what you would buy. And so that gives also more time for convicted people to get more allocation and benefit even more when some exponential factor happens.
Yeah, thanks for sharing that. I think that's really well said. And when we think about Bitcoin adoption, if there was the financialization and monetization of this new asset class, what would that look like? And I think it might look a lot like what we're seeing every single day with Bitcoin treasury companies and the integration of this into capital markets globally. So I quote Christian Carolles in saying that nobody is bullish enough, but I think we're getting closer every day. But I guess, again, in the interest of time, Pierre, I'll throw it back to you for any final words.
Yeah, where can people follow you, Alexandre?
You can follow me on X or LinkedIn at Alexandre Laizet. The best way to reach out is a message either on LinkedIn or on X, or feel free to tag me as well, and or the company, and that will be great. We always look at all the feedback that we have on a daily basis, and we take full consideration of it. So thank you so much all. And thank you, Pierre and Spencer, for the invite again.
Well, thank you for joining us. Thank you for being a leader in the industry. And we look forward to having you back on, and wish you a great rest of your week.
Thank you so much. Talk soon.